What makes cryptocurrency go up and down? Let's discuss what moves the market. Who are the big players and what happens when we buy or sell coins? Supply and demand is always the underlying principle in any freely traded market, meaning when there is not enough supply to fulfill the demand, price tends to rise until demand drops off or supply becomes too high and price naturally starts to drop. It is a constant search for equilibrium. In Bitcoin's case, uniquely, supply is limited to 21 million coins and is currently still very small compared to the vast old traditional financial system with its unlimited fiat currency creation. There is then a large wall of traditional fiat money potentially coming into a tiny asset class called cryptocurrency. That doesn't mean the Bitcoin price will always go up. Rather, it means that you see huge swings of volatility, which is generally in the upward direction. As time passes, volatility dies down and balance is found. Demand is somewhat dictated by the news flow and media coverage, creating hype around the asset, bringing new people to invest, or conversely create fear, uncertainty and doubt, causing the average small investor to sell. The big players of the market think differently, especially in the crypto markets, where there is less regulation and less liquidity to fill big orders. For a big player to fill a large buy or sell order, someone has to take the other side of that trade. That means without causing a massive price move, a big player can only fill their big buys when others are selling. For example, the 2020 COVID crash gave institutions and other big whales of the market a chance to fill large orders. Once filled and all the panic sellers exhausted, price was ready to rocket from $4,000 all the way to $64,000. Now looking back at the news, when price was around the top of $64,000, everyone was hyping up crypto and calling for the price to go to the moon and beyond. That gave the big players a chance to sell large amounts to the less knowledgeable of the market without crashing the price. Once the small buyers were exhausted and big players sold, the price started to crash. We can call this market manipulation or whatever, but that is the reality we live in and invest in. It is nothing personal either, just that filling large orders, you need someone to take the other side of that trade. Usually that other side will be the masses of people following the media and the popular influencers. That is why Warren Buffett is famous for saying, "Be fearful when others are greedy, and be greedy when others are fearful." No need to be a victim. Just do what the smart investors do.